Good evening, everybody, and I hope your trading day and your general day went well. Welcome to the closing bell here at MarketStream.live. My name is Joseph Cusick from the Cusick Group. Securities offered by MoneyBlock. Let's just run down all the action today. The Dow closed down about 0.1% at 19,805. You had the NASDAQ closing up at 5,556, up 0.3%. And the S&P 500, that closed up at 2271.89, up about almost 0.2%. Now, the action came in with inline volume, so it was hitting its averages, both on the New York Stock Exchange as well as the NASDAQ. And we want to keep an eye on that because we've had some mixed volume over the last couple sessions, but today was in line with its averages. The advancers did outpace the decliners today, and we still have new highs outpacing new lows on both the NASDAQ and the New York Stock Exchange. And basically, and frankly, there wasn't much as far as trading excitement today throughout the session. All the major indices basically stayed in a pretty tight trading range. And that was even post the comments that were made by Fed Chairman Yellen, which were at 3 p.m. Eastern time. Basically, she was very academic about it, saying that, not much of anything new. That the information that she put out there basically said that we're going to stay with the course that we're anticipating doing some rate increases over the 2017. That reassurance basically gave some positive feel to market participants, and the economic data that came out this morning just bolstered what we are anticipating that the Fed's going to do. That's also without knowing what the actual policies are going to be from President-elect Trump. We did see from an economic data perspective, the industrial production report came out much stronger than expected for January. And we also saw the highest year-over-year consumer price increase at 2.1% since June of 2014. So bottom line is that the Fed's going to continue with its projection of 3 interest rate hikes until 2017. Now, that boosted the financial sector towards the end of the day. That was a slowly developing rally, especially after the lackluster response to Goldman Sachs earnings, as well as Citigroup and Bancorp. Goldman Sachs actually finished off its worst levels, only down about $1.45. Citigroup finished down only 99 cents at 57.39, and U.S. Bancorp held its positive gains and was up 25 cents at 50.56. Bottom line is that the overall underlying strength of the other components of the sector basically offset any losses that we saw in those two larger financial names, Goldman Sachs and Citigroup. We're seeing also a digestion here of these earnings announcements. While there was some profit taking into those, let's see if we get a digestion on these pullbacks of whether or not we're going to see the buy the dippers again. Again, we've seen that since the election, there's been basically about on average 20% rally in the financial sector. Let's see if once these kits start to pull down at these critical levels, and that's why I point out those short, mid, and long-term levels that you want to watch when we're talking in tech talk. These are areas where you could see institutions and larger traders and investors come in and potentially be buying the dips. We're going to watch that. We also saw on the corporate news side Target. Target came in, lowered its fourth quarter guidance, basically, again, said holiday traffic down. This isn't something that's new. We've seen that across the board with the major brick and mortar as well as the smaller brick and mortar retailers. That pulled Target down $4.09. It's 66.85. And we had that ripple effect in the retailers. XRT finished down about almost 0.4% at 44.25. And we saw that there's pressure on the consumer discretionary space as well, down 0.2%. So that's where we saw the laggards. The energy sector continued to lag throughout the session and finished the day with crude oil finishing right above $51. Again, we're going to watch this very closely because we have with crude over $50, these shale operators, these rigs in the United States are going to be pumping, and they are continuing to pump, and they're putting more of these online because of the price factor over that 45 to 50 bucks. It makes it not cost prohibitive to pull this oil out of the ground. We're also seeing the OPEC nations are reporting year-over-year growth in their supplies. Watch the API data that's coming out tonight and the EIA data that's going to be coming out tomorrow morning after 10:30 Eastern time, right around 10:30 Eastern, 11:30 Eastern, somewhere in that range. You're going to see supply reports coming out. We're going to see whether there's demand or whether there's builder draws, and that will catalyze or weigh on the crude markets. We also saw that the dollar index finished up about 0.9% after basically being pounded for the last couple of sessions, up at 101 and a quarter. That did put a little pressure on gold, but it was able to scrape back some of its losses, and it finished at 12.12, down only about 0.1%. But you did see that gold miners and so forth were down. GDXJ down over 3%. That's the junior gold miners. We're going to keep an eye on that. The technology sector did outperform today with a 0.3% increase to the upside. We really saw that chips, the semiconductor segment, was really the driver. The Philly Semiconductor Index, SMH, was up about 1.4%, and that continues to move to the upside. We kind of had a catalyst with the silver markets moving to the upside. That could have been a little bit of a barometer of what we could expect from semis. Semis had been lagging up until that point. Now they're moving to the upside. Finally, taking a look at the U.S. Treasury markets, they came under some selling pressure in the overnight trade, and the pressure never really relented for the remainder of today. You saw that as the securities across the curve were trading in a defensive nature. Basically, the belly of the back end of the Treasury curve was getting hit the hardest. You saw that the 10 years increased by 10 basis points at 2.42%. You just saw the prices of those bonds just to completely start to pull back unrelentingly. You also saw the 5-year jump 10 basis points as well to 223. So you're looking at some maybe what would be considered offensive moves. And we're going to see if that money starts flowing back into the securities markets, but we'll have to wait and see. All right, folks, that's it for the closing bell right now. Join me tomorrow morning for all of our shows. We have 5 of them. Join us here at MarketStream.live, and also check out the archives. We need your support, so please take a look at what we have to offer, and we're going to keep building it out. Thanks, folks. Have a great night.